Hello everybody, this video is entitled Growth Crash TradFi Makes Me Nuts. Completely nuts. And why do I say that? Because in 1 month, in January, growth stocks have been through 3 gray swans. I guess I'm gonna call them gray swans. None of them were quite black swans, but we were between 70-80% there as far as growth stocks were concerned. That's a lot for a single month. The 2020s decade is an awful decade. The job of the investor in the 2020s is to not get wiped out. Retail should not get wiped out. I don't know what is going on with these algos, but it is complete nonsense. All growth was red. You may see Tesla in green here. The only reason why Tesla was green today is because Tesla got punished in advance. Tesla was heavy in the red yesterday. Even Apple, think about this, even Apple was red after their earnings report was outstanding. They're selling iPhones like hotcakes. It's a surprise how the new iPhone is selling. The market should be all over this. Even Apple is down. It's complete nonsense, indiscriminate selling. Everything is being sold off. And apparently it would be because it's Kevin Wart who's going to be the head of the Fed. Apparently someone perhaps a little more independent, a little more thinking on their own, may not listen to Trump as much as the market would have hoped. I don't know. He seems pretty dovish to me, and he's pro-Bitcoin. There's interviews of him circulating about how good Bitcoin is. He's a pro-Bitcoin Fed chair. And if you actually look at the odds of the decision in June, they moved a little bit. I guess now the market is thinking we're going to have 25 basis points, a little more than not. They barely moved. So the narrative, they tried to make you think that it's the Fed chair, but the Fed chair is dovish. The Fed chair is very dovish. Maybe not as dovish as Hassett. I'm not even sure about that. This is a positive news, but it seems like whenever you get a news, the market is going to trigger a sell-off. The market is triggering a sell-off whenever there is news at this point. Whether news is bad or good, the market is just going to dump your stock. This is the state of investing in the 20s. This is quite annoying. To me, this is a bullish news, okay? Maybe not as bullish as Asset, but still pretty darn bullish. And Asset has an important job with the government. You didn't want to quit, right? That was another concern we would have had if Asset would have been chosen. Maybe it's the government shutdown, but the government shutdown, historically, if it happens, it's good for markets. Historically, I mean, the data is pretty clear. We had a shutdown last October. We peaked in the market 10 days after the shutdown. So historically, it's been pretty good for markets. So I don't know what's going on. This is all manipulation, and this is what I tell you. Let's look at SoFi. These stocks are being treated like punching bags. SoFi, HIMS, I'm talking about growth stocks. You can see who the market loves. The market loves things like AT&T, like GE, like Verizon. Like they cozy up to these stocks with a bunch of debt that could be disrupted by the switch of a button. SpaceX, cellular, boom, disrupt, $200 billion worth of debt, maybe more if you add all of these up. I know some of us channel viewers are a fan of ASTS. ASTS is a similar story. Look, to me, this is not the time to get behind older. I mean, come on. You got Coke up, you got Pepsi up, sugary beverage, you got Colgate up. The market over a short term is nonsense. I have a very hard time. I'm okay with that every other month, right? Every other month, that's fine. But like 3 times in a month? This manipulation, like I said, the goal for retail is don't get wiped out, don't do margin, don't do options. And they've gone really too far. SoFi, case in point. Let's talk about SoFi. SoFi is firing on all cylinders. It is just outstanding. EBITDA margin 34%. The stock is still growing in the 30-ish% range. They now have 13 million users. I remember covering this stock when it was trading at $5, and it had less than 5 million users, like 4 million users or something like that. If you look at the valuation of this stock and you adjust it for the growth that it's had, it has not run. Moving from 5 to 22 when the business does nearly a 10x. That's not a run. Like, these stocks are still dirt cheap. And for SoFi, the market, of course, when they saw the report, the stock was up 5%. And then, boom, they dumped it. They absolutely dump it despite an epic 2025 for SoFi. They dump it. The initial reaction was right, but it seems like no matter how well you do, you're going to be dumped by this market in the short term. And it's extremely frustrating. This is driving a lot of younger people. This is driving a lot of retail investors away from stocks into crypto. This is all this is doing. We need tokenization ASAP. We need regulation ASAP, and these TradFi markets, I don't know what's going on, but it's so annoying. A day like this is quite annoying. I'm sure a lot of my viewers will agree. Here's another punching bag. HIMS is another punching bag. HIMS is already being priced. It's already being priced like they will miss Q4 in a very epic manner. Like they're literally being priced like they missed their Q4 and like they announced that they didn't grow in Q4 or something like that. This is nonsense. Down 10%? On what? On what news? I mean, this is an organic growth story. This is an organic growth story. This is not a macro trade. HIMS has nothing to do with the price of gold or silver, which dumped 30% today. Silver dumped 30% today. HIMS has nothing to do with that. HIMS is epically undervalued at 27, the way it was also undervalued when I was covering this stock when it was $6 or $7 3 years ago. The valuation has not changed. If anything, it's cheaper now at 27 than it was back then when it was at 7 or 8. Because if I look at my EV over GP over RG, it has always stayed under 0.1, and really like the lowest I've ever seen it for HIMS was a 0.07, maybe a 0.06. That was the really very much the lowest I've ever seen it. This stock never got re-rated by the market, never benefited from any sort of multiple expansion that it would warrant, that frankly it would warrant. Because if you look at a stock like HIMS, it's recurring revenue. 90% plus of the stock is recurring revenue. And the market, just like they did on Amazon, if you remember 2000s, in the 2000s, they would hate on Amazon because of the marketing spend, and because of how much they spend. The market is hating on HIMS because apparently they're spending too much money. Apparently they're investing in the future. The market doesn't like that they're investing in the future. But don't even trust my spreadsheet. Don't even trust the way I look at stocks. And as you know on this channel, I pay most attention to gross margin. Just do back of a napkin math. Enterprise value is $6 billion. Revenue for Q3 was $599 million. Annualize that. Assume revenue doesn't go up, doesn't go down. The revenue stays flat, right? And that's why I'm saying HIMS is trading like it's dropping revenue by 20%. Revenue, it's not, right? Revenue is still predicted to be way up next year. I'm sure they'll guide nicely up revenue. Maybe not 47% like I have, but I'm pretty sure they'll keep growing at the pace they have been growing. It would be an epic slowdown for this stock to grow at 60% and then move down to 20%. Epic slowdown. Plus, they gave us long-term guidance, which guides us at above 20% of long-term growth. Anyways, let's assume the growth is flat. Okay, you have nearly 2.4. Is it 2 here? I calculated it right. Nearly 2.4 billion of revenue times 0.14. This stock is trading enterprise value times adjusted EBITDA is trading at a 16.5x. 16 times EBITDA is what this stock is trading at. Current EBITDA, 16 times. Think about that. This would be enough to interest a value investor. But here's the thing. And this is where I think most people don't understand. This stock spends, a little north of $1 billion in marketing. And the big question is, what if HIMS stopped doing marketing? Would the revenue stick around? Imagine HIMS tomorrow stops doing marketing. Would the revenue stick? And my answer to that is a big ol' yes, the revenue would stick. Because much of the HIMS revenue is due to subscriptions. People who registered for hair loss, for ED drugs years ago who don't think about it anymore. Later cohorts, people who register for SSRIs, anti-anxiety drugs, don't think about it anymore. And then recently, people who registered for metformin, bupropion-based type weight loss drugs, which is a big part of their business, or maybe a compounded GLP-1 who are happy with the service and who just stick for the long run with the service. It's 90% recurring revenue, right? You know the multiple that's given in SaaS, despite the drawdown we've had in SaaS stocks, you know the multiple that they give for stocks that have recurring revenue. HIMS is one of these stocks, right? And HIMS is slated to have retention rate of more than 100% because they're starting cross-selling. Like, this is the same story as SoFi. You get someone through the door because of SoFi checking or SoFi loan, and then you get them to register to a SoFi credit card. HIMS is the same way. You get someone through the door because they need an ED drug, and then boom, you sell them an oral weight loss drug, like a metformin-based pill drug, and then boom, you double the number of products per user. This is the same thing. Maybe 5 years later, they start losing their hair, and you had a third drug to deal with hair loss. It's a cross-selling story. It's a recurring revenue story. It's a super high growth story, and the market just dumps it like it's a value stock. Like it's trading at it's trading less expensive than GEs and GM and the like, and these old world companies. So absolutely nonsense. I don't understand why HIMS is being treated like a punching bag. Moving on to another stock. Nebius down 10%, and you begin to see a pattern today, right? Because SoFi, we're down 11% from the open, right? Isn't that uncanny? SoFi is down, and of course, outstanding earnings, they're down 11%. You take a stock like HIMS. HIMS is down, well, I guess it went up a little bit as I record this, but it was down 10% in this afternoon, 10%, right? Didn't report anything, didn't do anything today. They were down 10%. And then Nebius also didn't report anything. Actually, Nebius also had bullish news because we had the Facebook and the Microsoft earnings yesterday and the day before yesterday, where they confirmed that they would keep spending wildly, and they're selling off equally. -10, -10, -10. Everybody's down 10%. You get a 10% haircut, you get a 10% haircut, you get a 10% haircut. Everybody, even the Bitcoin miners today were down 10%. This is absolute nonsense. And this is especially nonsense not only to the Bitcoin miners. I didn't check CoreWeave and IREN, but this analysis would apply to those stocks. This analysis applies to CleanSpark, applies to Cypher, or the stock in the sector, either companies going after AI GPU clouds or companies who are already there, like Nebius and CoreWeave. Okay, these stocks... There's the open claw moment happening right now, right? Clawbot, we changed the name a third time. It's open claw. What do we know? What do we know about these systems, right? We have engineers who, it works for you in the background, right? So your token use in the past, when you had to be in front of your computer and you could only work maybe 6 or 7 hours with the AI. Now, with OpenClaw, you can work with your computer, and in the background, while you're away, while you're asleep, it just goes and uses tokens for you, and does inquiry for you, and does research for you, right? So OpenClaw, I don't think I'm exaggerating when I'm saying that OpenClaw may up to 100x the use for tokens, the use for intelligence, because you have engineers, when they set up OpenClaw, they let it run in the background. On the weekends, they let it run, and it's just the software that works for you on the background. It runs the enterprise. It spins up its own entire agents. It creates its own software. It does everything without you having to type the prompts. It's OpenClaw who types the prompts for itself. It's agency. This is going to be, I would think, 2 orders of magnitude in token use. Could be more, could be less. Either way, the demand for intelligence is going to be insatiable. And this is a very bullish news. To me, I call this the reverse DeepSeek moment. But of course, the market is so short-term, it's not reflected into the stocks. It's not reflected into the stock. So $85 for Nebius, I can't even fathom how cheap that company is. Not to mention, Nebius owns 28% of ClickHouse. ClickHouse could arguably, maybe a few years from now, be compared to a snowflake. Which is, if ClickHouse ever is the value of a snowflake in the private market, that means the entire market cap of Nebius is not even big enough to justify the value of ClickHouse. And they have other subsidies. It makes absolutely no sense to me. And the last thing that makes, I guess this one makes a little more sense. Let me ask this question. Where are my headlines? You know what I mean by that, right? If you follow the channel. Where are my headlines? Oh, yeah. Bitcoin is outperforming today. It's an inflation hedge today. And of course I'm going to say this, because I've been the past few years, I've been following the news, and they can say, oh, Bitcoin is not an inflation hedge. Bitcoin is not working as an inflation hedge. That's why people have been running to gold. And they've been dismissing Bitcoin as an inflation hedge. Of course, today Bitcoin is acting as such, right? Because we had a bad we had a bad PPI this morning. That's also another reason why markets are down. Today, Bitcoin is acting as such. I don't expect to ever see any headlines, right? Any headlines about this. Bitcoin, of course, over the long run, you've never had the headlines. Of course, we know over the very long run, Bitcoin has beaten any sort of inflation you could imagine. It has beaten it over a 15-year period. It has beaten it. But it's beaten it over a day period. I think we deserve a few headlines about this. I really think so, because whenever gold was outperforming Bitcoin, we would get these headlines all the time. Well, how did gold do today? How did silver do? Minus 28% for silver, down minus 30% at one point. Minus 10% for gold, down almost, I think, 13 or 14% at one point. Think about how much money was wiped out, right, in the precious metals. Just insane. Between the two, we must be nearing $1 trillion between the two. We're probably almost at $1 trillion for gold. Actually, more than $1 trillion for gold, actually, now that I think of it. Yeah, more than $1 trillion for gold. That could be minus 10%, like $2 trillion. So yeah, absolutely insane, the moves on this market. And Bitcoin is outperforming today, and we should celebrate that, but we're not gonna see that discussion anywhere, because if it bleeds, it leads, and they want to make it bleed. That's the way it is. By the way, a lot of people complaining yesterday about strategy being down way more than Bitcoin. Well, that wasn't the truth today. Today, strategy was up nearly 5% if you count after hours. On the other hand, the Bitcoin ETF was about flat if you look at after-hour prices, and in-date was plus 1.2% intraday. So you can see we did a little worse than Bitcoin yesterday, right? We had a little greater correlation. So today we had a very, very favorable correlation, right? So today we greatly outperform, and that's typically what you find for strategy stock. If it outperforms one day, it will underperform another day, and vice versa. And you can see this over the long run. This is the correlation between the two assets over the long run. I've always said, I mean, it's not me, right? Saylor has always said it's about 1.5. You can see over past 5 days, for Bitcoin, we are at minus 4.4%. For strategy, we're at minus 6.1%. So pretty close to a 1.5. Over a long run, Bitcoin and strategy are correlated at about a 1.5x. So if Bitcoin does a 10x, I would expect strategy to do like a 15x, and probably much more because now we have the preferreds, and the preferreds are rebounding a little bit today, by the way. So crazy market, extremely frustrating day, if you ask me. I just want to have a normal market. Please, let's have a normal February. No surprise tweets, no freakouts. Let's have a normal February where we can actually focus on studying the stocks and the underlying benefits of each business model, and actually study the stocks. Anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.